Hello everyone, this is Prerana and I'm going to present on the topic of Singapore's economic sources, McCann's style of country analysis. Firstly, we'll look at the Singapore country profile and then to the history and discuss three factors that affect the economy and then Singapore present economic and then the future. First, let's look at the country profile. Singapore has the location of southern tip of Malay Peninsula, 734.5 kilometers square. Population is 6.4 million, and global role is leading global financial and trade hub. Singapore started as a British colony in 1819 and became a key trading port. It was occupied by Japan during World War II, then returned to British rule. In 1965, it gained full independence. Under Lee Kuan Yew's leadership, Singapore rapidly industrialized, invested in housing, education, and infrastructure, laying the foundation for today's economic success. After gaining independence in 1965, Singapore shifted from a colonial economy to a state-led development model. The government under Lee Kuan Yew played a strong central role, focusing on attracting foreign investment, building infrastructures, and creating jobs over time. Singapore evolved into a liberal economy with low taxes, strong legal institutions, and global trade openness. Political stability and a strict anti-corruption law supported investor confidence and long-term planning. Factor influencing Singapore economic prosperity. Singapore economic success is driven by several key factors. First, strong political institution and governance. It ranked fourth globally in political stability and third in corruption perception, creating a self-predictable environment for business. Second, the rule of law is strictly enforced. The government maintains central control, but with an independent judiciary and strict anti-corruption measures which build public trust and attract foreign investment. Finally, inclusive institutions like SkillsFuture and trade policy ensure equal opportunity and continuous development of human capital. Together, these factors create a stable, transparent, and growth-oriented economy. This is the corruption index of Singapore. Singapore has got a score of 84 out of 100 and the rank is third out of 180. Singapore liberal market model. The key features are market regulation, labor market, finance system, and business strategy. First, market regulation. It consists of low taxes, investor friendly, minimal red tape. Labor market consists of both uplift model, skilled foreign labor access, and the next one is financial system, secure, tech forward, and well regulated. Lastly, business strategy, global FTAs, infrastructure. Let's compare Singapore with other economic models. Labor markets. Singapore had got flexible market driven, Germany has got regulated collective bargaining, and China has got state control implement. Business coordination. Competitive independent firms in Singapore. Germany has got government backed cooperation, whereas China got state owned enterprises. In innovation systems, Singapore has got private R&D venture capital, Germany has got private public private R&D coordination, and China has got government driven R&D. Welfare module. Singapore means tested social security, Germany has strong social safety net, and lastly, China has got state provided benefits. These are the figure of labor income Singapore compared with selected economy. Singapore has got the lowest one, which is 42.9. Rule of law. Singapore ranks consistently high in the Rule of Law Index by the World Justice Project. It reflects the country's strong legal framework, strict law enforcement, and an independent judiciary. At the same time, Singapore's centralized government maintains tight control over political space, ensuring rapid policy implementation and government efficiency. This model ensures the protection of property rights, enforceable contracts, equal legal treatment, and strong anti-corruption measures led by the Corrupt Practices Investigation Bureau or CPIB. Inclusive institution. Inclusive institutions are the backbones of Singapore's success story. They promote equal opportunity, innovation, and sustainable growth. First, the rule of law ensures fairness, accountability, and protection of individual rights and creating trust in both government and the economy. Second, an open market economy allows for free trade, minimal barriers, and strong support of business entrepreneurship. This keeps Singapore globally competitive and investor friendly. Together, these inclusive institutions support long-term development, reduce inequality, and build a resilient economy that benefits all. Let's talk about present context, economic policy, and their impact. Free Trade Agreement (FTAs). Singapore has signed over 25 free trade agreements with countries and regions around the world. These include key deals like ASEAN Free Trade Area, Singapore-China FTAs, US-Singapore FTA, EU-Singapore FTA, and CPTPP. These agreements lower trade barriers, reduce tariffs, and make it easier for the Singapore to access global market, boosting export and attracting foreign investment. The next one is corporate tax rate. Singapore offers a highly competitive corporate tax rate of 17%, as stated by the Inland Revenue Authority of Singapore, or IRAS. This low flat makes Singapore attractive to global businesses. It doesn't stop there. Additional tax incentives are provided for key sectors such as finance, biotechnology, green technology, and digital innovation. These incentives aim to encourage investment in high value, future ready industries, supporting Singapore's transition to a smart and sustainable economy. Green Plan 2020-2030. Singapore's Green Plan 2030, led by 5 ministries, aims to build a more sustainable future. It targets electric vehicles, solar energy, green jobs, and cutting waste. Smart Nation and Digital Economy. Through the Smart Nation initiative, Singapore promotes AI, 5G, fintech, and digital skills, positioning itself as Asia's leading digital economy. SkillsFuture and Labor Strategy. SkillsFuture, led by SSC, is a government-funded program for lifelong learning. It supports Singapore's economic transition through digital skills training and mid-career reskilling. These are the Singapore's shift to higher skill services based on economy, which are registered nurses, accounting, software, and application developers, according to the Minister of Manpower 2021. Let's look at these sectors in Singapore economy. Financial and insurance services. This sector has been in steady growth supported by Singapore's role as global financial hub. Strong regulatory frameworks, political stability, and digital finance adoption like fintech, insurtech are key growth drivers. Health and social workers. This sector is growing rapidly due to Singapore's aging population and rising healthcare needs. Government investment in healthcare infrastructure and elder care services continues to boost demand and job creation. Professional services. This include legal, accounting, and consulting services. Growth is driven by Singapore's status as a business-friendly environment, demand for corporate advisory, and the expansion of regional headquarters and startups. Singapore information and communication sector is growing rapidly, driven by digitalization, 5G rollout, and strong government support through the Smart Nation initiative. The country aims to become leading digital economy in Asia, promoting innovations in AI, cloud computing, and digital analytics. Cybersecurity has become a critical area, especially with increased digital dependence. Growth in this sector is driven by the national strategy to support infrastructure, support for cybersecurity startup, and high demand for skilled professionals. The government also invests heavily in digital trust, data protection to ensure safe digital transformation. These sectors are key to Singapore's vision of secure, smart, and connected future. These are the major trade export and trade partners of Singapore. The trade export includes of electronic petroleum products, chemical, biomedical products, financial and professional service, ship and marine equipment. Whereas the trade partners are US, China, Malaysia, European, Hong Kong, and Japan. Singapore trade balance over the past decade from 2030 to 2023 according to OEC 2024. As you can see, Singapore consistently maintained positive trade balance, meaning its export exceeds its import every year. This surplus reflects Singapore's strong performance in high value export like electronics, refined petroleum, and pharmaceutical. This stable surplus also highlights its role as a global trading hub with efficient port infrastructure and strong free trade agreements. Despite global economic disruption such as COVID-19 pandemic, Singapore trade remains silent, bouncing back quickly and continuing to support the country's GDP growth. This slide highlights the Singapore top 5 export commodities in 2023. Electronics led at 161.7 billion, showcasing Singapore's key role in global electronics manufacturing. Petroleum is the second largest, is due to Singapore's advanced refining capacity and re-export strength. Machinery follows at 74.1 billion, used mainly in high-tech and industrial sector. Pharmaceuticals chemicals are at 35.6 billion and gold export is 18.5 billion, reflecting Singapore's status as a precious metal trading and storage hub. This is the Singapore's trade products, which are integrated circuits, refined petroleum, gold, and so on. The destinations are Hong Kong, China, Malaysia, United States, Germany, and so on. This paragraph shows Singapore import value from June 2024 to May 2025. Imports were relatively low and steady from June to September. A sharp increase began in October, peaking in November and December 2024, likely due to year-end industrial demand and holiday-related trade activity. Imports then dropped in January 2025, followed by moderate levels from February to May. These are the imports, destination and products: Japan, United States, China, and so on. And the product can be integrated circuit, refined petroleum, crude petroleum, and so on. The Singapore's top 5 imports are electronics, petroleum oils and crude, machinery, gold, precious metals, pharmaceuticals, and chemicals. Singapore's population pyramid shows a contracting shape with a narrow base, wide middle, and growing elderly population. This means fewer young people, a shrinking birth rate, and more senior age 65 and above. By 2030, in full residents will be elderly. This aging trend puts pressure on healthcare and workforce, pushing Singapore to invest in automation, foreign talent, and lifelong learning to stay competitive. Population and education. The demographic trends are aging population, migration impact, and educational strength. This is the Rostov's stages of economic growth. High mass consumption is the first one, then the drive to maturity, and the next one takeoff, and the fourth one is precondition for takeoff, and the lastly traditional society. This slide consists of the GDP growth over time World Bank 2024. 2023 plus 1.1% slowed due to global uncertainty and weak external demand. In 2024, plus 4.4% strong rebound led by manufacturing and refinance and trade. In 2025, minus 0.6% quarterly contraction reflects short-term economic cooling and long-term average 6 to 7% annual growth. Singapore remains resilient but faces external risks. Singapore unemployment rate rose to 2.1%, highest in a year, up from 1.9%. Retrenchments dipped slightly to 3,300, mainly due to business restructuring. Employment growth slowed sharply especially in export sectors. Business sentiment weakened in March, signaling cautious hiring and worse outlooks ahead. Labor market under pressure from slowing growth and global trade tension. Now let's move towards the future trends and pathways of Singapore. The future challenges are the green energy shift, geopolitical risks, and aging population. Singapore's target net zero emission by 2050 by transforming industry, investing in low carbon tech, promoting green transport, and cooperating internationally. A carbon tax will be guide businesses and consumers, and everyone, government, business, individuals, plays a vital role. To secure a clean energy future, Singapore focuses on four key areas: natural gas, solar power, regional power grids, and low carbon alternatives like hydrogen. Energy efficiency is central, and success depends on collaboration across all sectors of society. This chart shows the percentage contribution of major power companies to Singapore electricity generation. Key players like Tuas Power, Senoko Energy, and Keppel Mermimau Kogen consistently contribute a large share. The mix has remained relatively stable, and with Tricas and Senoko being the top contributors. As of mid-2024, Treasure Power's share has increased slightly, showing a gradual shift in the generation landscape. These are the future economic pathway of Singapore: sustainability, green transition, digital economic innovation, and regional global trade expansion. In conclusion, we learn about the past. Former British colony gained independence in 1965, focused on industrialization, housing, education, and infrastructure, and rapid development through strong government planning. Present shows liberal market economy, global leader in finance, tech and logistics, high human capital investment, efficient legal system, low corruption, strong rule of law, and top global exporter and importer despite small size. And lastly, in future, challenges like aging population, green energy shift, global geopolitical tensions, opportunity like Smart Nation initiative, green job, digital economic growth, and strong institution and long-term strategy position in Singapore continued success. These are the references. Thank you.